High-yielding ETFs, or ETFs that offer a lot more income potential from day one, can be useful to add to your portfolio in order for your portfolio to cash flow a lot consistently, to either allow you to live off that income and or to buy more dividend-paying stocks and ETFs consistently. But what pretty much every single investor hates about some of the high-yielding or even ultra-high-yielding ETFs across the market is the fact that a lot of them, at least historically, have decayed over time and made the investor's underlying asset worth less and less over the years. Take Tesla, for example, an ETF that offers a massive starting dividend yield and an ETF that has paid investors a lot of income historically. But as you can see in the max time frame, Tesla is down almost 60% since it started trading. This is just back late 2022. So even if an investor bought into Tesla and earned a ton of income monthly, let's say, their underlying asset has degraded over the same time frame. So in this video, we're going to go over 5 different ETFs that all offer north of a 10% starting yield, but have not degraded and have not decayed like we see right here, like Tesla has. All 5 of these ETFs are personally inside of my long-term portfolio, and I've enjoyed holding on to every single one of them, at least as of so far. So if you want to see 5 stable, safe-ish ETFs that yield over 10%, well then make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the first ETF that yields north of 10%, around 11.27% as of filming this video, as of the 30-day SEC yield, is one of my favorites, the JPMorgan NASDAQ Equity Premium Income ETF, or ticker symbol JEPQ. Now, across the investing community, especially more than ever as of recently, it feels like JEPQ is finally starting to get the flowers that it deserves, and it seems like now all sorts of dividend-focused investors are buying into this one like crazy. Now, I started buying JEPQ basically when it first started trading years ago, and I've loved this investment ever since. JEPQ seeks to deliver monthly distributable income and NASDAQ 100 exposure, but with less volatility. This ETF implements a written on the money NASDAQ 100 index call option that seeks to generate distributable income on a monthly basis, and that's exactly the way this ETF pays such a high yield, considering the NASDAQ 100 of course doesn't. Now, along with the more or less 11% yield that JEPQ offers, we're talking 15-16% return as far as price goes on the 1 year, and on the max time frame, JEPQ is up around 17-18%. So not only has JEPQ been stable and not decayed over time, but this ETF has actually taken a turn for the better and has actually grown over time, making a lot of us original JEPQ investors up substantially on our cost basis. JEPQ is one of my favorites. I talk about it all the time on the channel, and I'll probably keep talking about it for years to come. Another ETF that offers well north of a 10% yield, around 12% to be exact, and offers stability, consistent payouts. One of my other favorites is SPYI, the NEOS S&P 500 high income ETF. This ETF utilizes the S&P 500, and then with implementing a data-driven call option strategy, it offers around a 12% distribution rate, like I said, and does so very tax efficiently. And this is because this ETF seeks to take advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower tax rates. This fund also at times buys SPX options, which means there is also some upside. And looking at the max time frame as of right now, at least, there has been some upside. This ETF is not necessarily going to get you mega rich as far as growth goes, but for an income-oriented ETF that a lot of us are looking for, including myself, that's going to offer, let's say, 10%, 12% per year as far as yield goes. Honestly, a lot of us would take almost anything as far as upside from there, and SPYI has offered us around 8% on the max time frame. So not only has SPYI since inception not decayed, not degraded, but it's actually up around 8%, and that's of course not including those massive payouts. Another thing I love about SPYI is the fact that this ETF pays a consistent-ish payout, around 48, 49, 50 cents every single month, so your income, at least based off of the payouts so far, can be somewhat predictable. All that to say that SPYI is one of my favorites. You guys have heard me talk about it a ton on the channel, and is one of my largest S&P 500 exposure high income ETFs that I hold as of right now. But speaking of NEOS, another one of my favorites that has not decayed, offers a stable-ish 14% distribution rate, which is massive, is one of my other favorites, an ETF that I've been adding a lot more as of recently. I'm talking about QQQI, or the NEOS NASDAQ 100 High Income ETF. Now, this ETF is just like SPYI, and guys, keep in mind, I talk about all these ETFs individually on my channel, so definitely take some time, go through some of my other videos, and of course, make sure to subscribe. But this ETF utilizes the same strategy, only it does so on the NASDAQ 100. Now, with the NASDAQ, you're going to get a little bit higher beta, beta, so that means maybe a higher distribution because of course there's more volatility. But again, this ETF utilizes an option strategy. It gives you exposure to the NASDAQ 100, and it also does so tax efficiently. And the best part of all is, at least since inception, again, these ETFs are relatively new, but still, since inception, this one's up around 7 or 8%, again, not including that 14% more or less yield. Now, this is of course, once again, great because a lot of us are buying into names like the NEOS NASDAQ 100 high income ETF for high income. But along with that, with an ETF that at least so far, basically over the last year now, has been stable, that's honestly just a bonus on top. Now, a few other ETFs that offer stability as far as price goes and yield, at least as of so far. One of my other favorites, SPYT, the Defiance S&P 500 Income Target ETF. Now, this ETF offers a 20% distribution rate, and it has a very unique strategy. It says aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. Now, this ETF is actively managed, and it generates income using this strategy. It says our strategy revolves around holding shares of ETFs that track the S&P 500 performance and engaging in selling daily credit call spreads on the index. Now, the investment approach is basically aiming to achieve a target level of 20% yield per year, but a lot of the worry that I had even with this ETF, because I did buy this one quite a bit ago and I have been buying a little bit more ever since, is that, all right, maybe it's going to yield 20%, but what's going to happen to my underlying investment? Is it going to decay? Am I going to lose money as far as total return goes? And that, at least as of so far, knock on wood, has not been the case. To be specific, the ETF on the max time frame is basically flat, which I personally do not mind whatsoever. This ETF has held up pretty good, and this is since early March this year. The ETF started trading in March at around $19.96. As of filming this video, it's basically completely flat. Now, even if this ETF forever, for all the years that I hold onto it, traded exactly sideways and stayed at $20 per share, but with doing so paid out, let's say 20% yield, which, to be more specific, going through some numbers, this is around 34 cents per share per month for an ETF that costs $19.97. That is a massive potential for income. So even if the ETF kept trading sideways and flat like it has, that's honestly a complete win in my book. It shows stability, and it hasn't navigated, at least as of yet. Now, the last ETF that yields well over 10%, this one's around 25% and has been stable since inception so far, which is now over an entire year, is FEPI, the Rex Fang Innovation Equity Premium Income ETF, an ETF that I have held since the start of it, but only in a small portion. Now, FEPI has a unique strategy. It basically owns big tech stocks and then writes cover calls on those stocks, and then with that offers investors like myself and like you guys enhanced income potential. Now, even though this isn't a groundbreaking strategy and you and I could of course buy into names like these, write cover calls, it's honestly nice to have a fund manager do it for you, because I don't want to buy 100 shares of all these names if I don't have to. Now, FEPI so far has offered, like we said, a 25% distribution rate. This is $1.09, $1.08, $1.15 at times on a monthly basis for an ETF that costs $52 per share. Now, the best thing of all is that even though FEPI pays out a massive amount of income, this ETF has been stable so far. It's up 2.2%, and this is since October of last year. So it has been trading for quite a while, and sure, some of the underlying names have done better than this, but honestly, for me, just like SPYT and maybe even some of the others, even if FEPI decided to trade sideways for the next 5 years and pay me 25% yield for 4 or 5 years, that would return your entire investment more or less, and at that point, you're playing in pure profits. Now, out of all the names, FEPI is a name that I don't really have a large portion of, but I have been adding a share or two here and there, just because I do want some more FANG exposure, but why not do so in an income-producing manner? So there we have it, guys. Those are 5 different ETFs that all have offered stability, at least so far since inception, and have offered a north of 10% starting yield. But before I go, I want to ask you guys, out of all 5 of them that we talked about in this video, if you could only choose to hold on to one of them for whatever reason, which one would it be? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.